Over 8 years of trading, I've tried and tested a lot. Hundreds of indicators for trading on TradingView. I've got a lot to tell you about them. In this video, I'm going to expose most and overwhelming majority of all sorts of popular indicators. I'll show you how to tell when an indicator doesn't work. And most importantly, I'll demonstrate in practice one extremely important point. This is the very indicator most people dream about, but have no idea where to find. With 100% accuracy. It's absolutely unique. It's used by major hedge funds, big banks, and analytical investment organizations. Basically, those who trade with massive capital. The actual true big players in the significant digital crypto market. And on that note, my name is Alex. For a long time, I worked at various types of crypto exchanges, pseudo-brokers. In general, my career was as an employee and analyst at all sorts of crypto and pseudo platforms. I've got a lot to share with you. Let's begin with the very first and most popular indicator. If we take a look at the original definition of MACD, moving average convergence divergence, it's a technical indicator developed by someone way back in the day, used to assess currency fluctuations or stock market movements. These days, cryptocurrencies are especially popular, so it's used on the crypto market as well. But in reality, let's open up the MACD indicators and see the following picture. The MACD indicator doesn't provide the precise, systematic signals that should ideally be present in the crypto market because the crypto market is overall a very volatile market. Accordingly, the more accurate an indicator is, the better. What can we say about old tools that were used 50 years ago to analyze oil prices, or for rice, gold, or anything else for that matter? But that's just completely useless now. So let's take a look. Here we have a divergence, where we can see the divergence on the histogram. We've identified this divergence, and there's a corresponding divergence with the price. At this point in time, however, friends, the moving averages started to curve much earlier, and it's all a bit unclear. There seems to be a divergence. It looks like it actually worked, and we can see an upward movement on the chart from this moment on. Yes, that's true, but all of this is only clear in hindsight. If we look at what was actually happening at the time, during that period, there was a lot going on. There are plenty of factors that could lead you to enter a trade incorrectly. The first entry was from here. This is the initial price. After that, we see a corrective move of a full 48%, and it would have been possible to enter much later. Accordingly, the entry point would have been significantly better. Let's take a look at the next point. Trend indicators like the moving average are also very well known. It's actually a classic story. Moving averages are interpreted in all sorts of different ways. You can look at this from the perspective of trend analysis, or in terms of the retest zone at the time. Here is a test. Here is a retest. Here is a test. Here is a retest. But again, all of this is only visible after the fact, and it lags behind. No matter how many days you use to calculate the moving average to determine its average value, it won't work with pinpoint accuracy because market makers are well aware that such tools exist. Accordingly, the vast majority, 97%, use these tools. And based on that, what market maker is going to let people make money, really? If they're using the most standard, the most basic indicators that were used 50 years ago, no market maker is going to do that. But it's very beneficial for market makers to push these indicators to keep them in the public eye. That's why you've probably seen a huge number of different videos on YouTube teaching MACD, moving average, simple and exponential averages, ADX indicators, VWAP, Bollinger Bands, stochastic, and so on and so forth. There's just so much of it. On YouTube and generally online, on various websites, you can find all sorts of trading tutorials. It's in the market maker's interest for all this stuff to be talked about, which is exactly why the first thing that comes to mind when we talk about standard indicators is, of course, the classic topic that hasn't worked for about 50 years now, and especially not in the cryptocurrency market, where trends tend to change extremely quickly. It's not even necessary to know how the stochastic or ADX works, for example. And we're here to understand that this doesn't work. We can see that it's lagging in this case. Let's take a look at it together. The moving average is lagging here as well. And in this case, the ADX indicator signals are by too late, just like it does with sell signals. Late, and late again. And the stochastic gives you hundreds, maybe even thousands of different entry points. And it's absolutely unclear which one to take. Indicators need to be adjusted. One indicator is adjusted by another indicator. We looked at this in the previous video. Second, third, fifth, 10th. In this way, we supposedly find the ideal entry model. But in reality, a big player uses only one, or maybe a few indicators. And now I'll show them to you. Absolutely fantastic indicators with no equivalent on the market. Indicators that are used by hedge funds and major market makers during their work with them. Honestly, they've never let me down. Now I'll show you how it works in practice and explain the logic behind it. So let's take a look at the Floki coin as well. When the price is in the green zone, every time that's an accumulation phase, and afterwards there's a massive explosion. We can see price increases of over 200%. Same thing with a recent situation. The chart, this happened literally just a couple of days ago. Accumulation, accumulation, accumulation within the green zone, then a price explosion. We saw a 57% increase in just 8 days. It's an absolutely unique thing. A truly unique indicator. Let's take a look at the Davi coin as well. Why not? Today, we'll go through some meme coins together. So, the green zone, a bounce, an instant reaction, 48% in 10 days, 34% in just 1 day. That's something incredible. In fact, 120% in 138 days. What kind of business, what bank, what hedge fund can show you this kind of growth? And of course, they can't show it, but they do enter using this very indicator. And in fact, after that, they share 15 to 20% of the profit with clients over 150 days and all the rest. And as we can see, according to this indicator, 120% was made from just one position on a single asset. Of course, they keep all the rest for themselves as royalty. Just recently as well, let's take a look. An accumulation touch, 15 to 17%. And we can see a price explosion, 31% in just 11 days. That's something incredible. All you need to do to start using our indicator is simply get it through the link in the description. After that, just open it on TradingView. The indicator is ready to use. As for outdated indicators that are no longer relevant, our team and I have transformed this story. Now we have an unusual, standard MACD. We have an absolutely awesome Instagram. Absolutely cool. Absolutely unique. A histogram that shows divergence down to the millimeter, and it has always worked. Let's look at the Bitcoin weekly chart. At the very bottom, we can see the histogram starting to round off. Accordingly, at this point in time, the sellers just don't have enough strength. And after that, there was a colossal price surge, and the entire bull market started right from the very lowest point. As for selling, in the previous cycle, in 2021, look, there was a divergence. In fact, the indicator predicted an 80% correction, which at first glance seems very similar to the standard MACD, but actually isn't. And in exactly the same way, at this moment, we can see a divergence. And after that, there was a 35 to 37% correction. Just a single divergence, one divergence on the chart. And what a truly unique result. If we look at the indicators in combination with all this, which signal that here, and here on the weekly chart, the bull market always ends. And it really did end there over 10 years, not a single mistake. In exactly the same way, here, and here is where the bull market begins. The start of a rising cryptocurrency, and indeed, not a single mistake in 10 years. Along with the histogram, which right here indicated the start of the bull market, the upward rally. And right here, it signaled the beginning of a bearish divergence, a downward rally, and together with the green line, which in fact, here, and here, absolutely everywhere, showed a unique entry point. This story just seems like an explosion, in fact, of the entire cryptocurrency market. What it does is make the crypto market absolutely simple, absolutely easy, without any flaws or hidden pitfalls. Everything can be checked against historical data. Actually, the history of the market simulator is a truly unique thing. The indicator is good because it's used by major hedge funds. It shows where the maximum zone of euphoria is for people, where they're buying with their last bit of money, selling their apartments, cars, and country houses. At that moment, a big whale, a major player, a hedge fund, is offloading. As for buying, it shows where people are at their greediest, where people have no understanding that this is the bottom, where on the contrary, people are panic selling because, well, it's dropping and their nerves can't take it anymore. Their heads are just exploding from the fall of cryptocurrencies. At this moment, the big player is buying. That's exactly why the crypto market always moves against the majority. Our tools show the actions of big capital. The difference is extremely simple. If we look at the readings of regular, most standard indicators, we can see that 50 years have passed, a very long time. In that time, everything has changed. Market makers have become greedier, more sophisticated. In fact, market makers, large hedge funds, investors, and big whales do everything they can to make you make mistakes in the market. And statistics are stubborn things. If 97% lose, that means 97% are making mistakes in this business. Use our indicators and don't fall for the traps set by market makers, hedge funds, and everyone else trying to take your money. If you found this video helpful, be sure to give it a like. It really helps the channel and motivates me to create more content. This was Alex with you. See you soon on the Wiseflow channel.